Joining us now is Mark Fields, former Ford Motor Company president and CEO and a CNBC contributor. I guess we had no idea about any potential problems until Tesla said that, Mark. I guess they meant if Tesla says it, then there really is something happening here. I guess that's kind of what we meant there. That was the latest. It's a centipede or a millipede, and that was just another one of the shoes to drop, but it involved Tesla.
Yeah, I mean, Joe, when you look at the EV market, you're starting to see the EV market, the growth in the EV market acceleration kind of slow down. And, for lack of a better term, if you look at the last year, the market share of EVs was up about 2.5 points versus the previous year. But in the second half of the year, you saw that growth kind of slow down. So, not to say it's kind of running out of gas, but, you are starting to see now as you go for mass adoption, that's a lot harder than early adoption. And when you see some of the concerns from consumers around, we've talked about in the past around cost and the charging network and repairs and insurance costs, I think one of the bigger things that's emerged for consumers is the residual values because, they performed very poorly, EVs overall in residual values. A lot of that has to do with the price cuts that Tesla took. So if a consumer thinks their vehicle is going to be worth a lot less, overlay that with, a lot of new products coming into the market this year, which will increase the number of EV offerings about 50%. It's shaping up to could be a very difficult year selling EVs from a pricing standpoint and a market environment.
Mark, what we've seen is almost a perfect storm. It's one, like I said, it's one shoe to drop after another. And I want to go back to some of the decisions you made at Hertz. Did things really change? And take us back. You decided that Hertz was going to buy a lot of EVs. The news recently that, it sort of shook everyone was that Hertz totally backtracked on half of the purchase that it was going to make because no one wants to rent an EV. Was that a big screw up on your part to order all those EVs, or did the dynamics change that much in the last couple of years?
Well, listen, Joe, when we made that decision at Hertz, we saw the EV market growing, and we made a bet as a company that said, listen, being a first mover and understanding how to manage EV fleets is going to pay off for us over the long term. And so we were first movers. We've learned a lot. But listen, like any good business that lays out a strategy, when you see the market environment change pretty markedly, you have to make corrections. And in this case, as you heard from the CEO at Hertz, Steve Scheer, we saw demand less than we expected. We saw repair costs higher. But most importantly, the biggest cost in a rental car company, Joe, as you know, is depreciation. And when your main supplier cuts prices 20%, which we haven't seen, in recent automotive history, that hits our income in a really big way. So, the company made adjustments, as they should. But the bet is still, I think, the right one because you're going to continue to see EVs over time, slower than everybody expected, become more and more, part of the industry. And, Hertz will be well positioned for that. But, they had to react to the market conditions.
Being a first mover, I worry that we've got an administration or a government that decided it's going to be the first mover on this. And I think where we are right now, Mark, could be the tip of the iceberg. And there's a lot of things may not say solvent long enough to wait for that eventual all-in transition to occur. I mean, these emission standards and number of EVs that need to make up the percentage of how many vehicles are on the road, all these things are going to get pushed way back because you can lead a horse to water, but consumers aren't drinking. They're not drinking. And this could be the beginning of a really ugly period for investors and a lot of other people that just went whole hog with the Biden administration.
Well, Joe, we all know the track record of government kind of picking technologies that consumers are going to want. It's not particularly good. And you rightfully said, listen, they laid out regulations and they went out of their way to say, listen, we're not telling you what technology to use. But they knew very well that with the regulations that they set in terms of fuel economy standards, that electrified vehicles were the only way that the automakers could achieve that. I think, at the end of the day, from a consumer standpoint, Joe, today, as you get to mass adoption, the purchase of an EV is completely discretionary. And so when you lay over some of the concerns that, I mentioned a little earlier, combined with an economy that's somewhat uncertain, from a pricing standpoint, it could be a tough year for selling EVs. It's going to continue to grow, but automakers are going to have to make a choice. Do they potentially cut prices to stimulate demand, or do they live with undercapacity utilization at their plants? Either way, that could hit their margins.
And Mark, real quick, one of the things that Elon Musk said on his call, which I think a lot of people were not surprised about, perhaps maybe surprised he said it aloud, is that he believes that some of the Chinese vehicle makers, EV makers, are doing a much better job than the EVs that are coming out of the United States. How much do you think this is a product problem? We could talk about the infrastructure issue in terms of charging stations and the like, but he's saying, look, it's Tesla and the Chinese companies, and he was saying that without tariffs, actually, that the American automobile makers, their lunch would be eaten if like BYD was able to just, not flood the market, but even sell them at competitive prices.
Well, clearly, Andrew, as you know, from the Chinese EVs, their cost basis is significantly lower than Western companies. Now, part of that was probably driven by government incentives because, the Chinese government 15 years ago said, hey, listen, we missed out on being a leader in ICE engines.
He's talking strictly about prices. I think he's talking about the quality of the vehicles, the feature set, just how good they are.
Well, listen, they have absolutely upped their game on quality versus where they were 10, 15 years ago. It's a different level of quality, probably matching the Western automakers. I think the other thing, when you think about the product content there, listen, Chinese consumers, they really go from a digital first perspective. So in their vehicles, they want the latest electronics. They want the latest, digitally enabled features linked to their phones, et cetera. The U.S. consumers are somewhat different. But your point being, and Musk's point yesterday, is, listen, they have a big competitive advantage. And, I think one of the advantages that Tesla has versus maybe some of the other Western automakers is they're competing with the Chinese on their home market. And when you're competing at the coalface with one of your toughest competitors, you become better overall, not only in that market, but around the world. So I think this is going to play out really interestingly, from a political standpoint, from a tariff standpoint here in the U.S. But it's very clear the Chinese have upped their game in a very big way with EVs.